What's up, guys? So in today's video, I'm going to be talking about the largest one-day drop in the U.S. stock market history. So as you guys know, yesterday the stock market tumbled 13% on Monday with the coronavirus epidemic, led to wider shutdowns across the U.S. economy, and Donald Trump called for extreme measures across the nation. So the Dow Jones Industrial Average fell almost 3,000 points, the biggest one-day plunge ever. So this is bigger than the Black Monday crash of 1987. So basically what's been going on is that a lot of things have been shutting down. So even though that the Federal Reserve slashed interest rates to zero, there's just been a huge slowdown in economic activity, especially with basically people warning against a meeting, people in groups larger than 10 people. So I kind of just wanted to talk a little bit more about this article. Even though as of recording this video, it looks like the Dow Jones and the S&P 500 futures are up, so I would expect us to bounce back a little bit. But I want to talk about, guys, kind of an emotional intelligence that you need to deal with right now. So this video is going to be a little bit different than some of my other videos. It's going to basically talk more about maintaining emotional control in times like this than individual stock picks. So I'm not going to make this the longest video, but I just want to tell you guys a short story. So I was in basically a similar situation back in 2008. I had a lot of money. I was very young. I was maybe 20 years old, something like that, 21 years old. And I've been working online. If you guys didn't know, this is what I do. I work online, so I've been freelancing and I trade stocks and things like that. I've been doing this off and on for the past, I would say, 14 years, and I've been doing it full time for the past 11 or 12 years. So what happened when 2008 is simply there was pandemonium and the stock markets crashed, and you had stocks selling at just rock bottom prices. I remember Bank of America was $4. Starbucks was cheap. McDonald's was cheap. Um, you know, there were so many cheap stocks, and everyone was so scared. They know all the stock market's going to go to zero, or all people aren't buying stuff. And then there's something that I like to talk about where it talks about short-term thinking versus long-term thinking. So if you guys want to do well in the stock market, please don't make the same mistake I did. Thinking that the world was going to end in 2008, thinking that things would never turn around. Everything goes in cycles. So the people that stayed invested, the people that bought up the stocks at rock bottom prices, the people that, thought long term, they didn't let today's problem turn in tomorrow's future. What is going on today is there's the one thing that's guaranteed is change, guys. What is happening today is guaranteed to not be happening the exact same way next year, 2 years from now, 5 years from now. If you want to invest in stocks and you want to make a lot of money, you need to think long term. And when you think long term, you're not letting your emotions of today destroy a better tomorrow. So what that means is for some of you guys out there, and it really depends on your age. If you guys are 50 and up, then this might not be the best advice because you're near retirement age. You should already be conservative. So I already told you guys about the the rule of 100, which basically you subtract your age from 100 to figure out what percentage you should be in stocks versus bonds. So for example, if you're 50 years old, you should probably be 50% bonds, 50% stocks. If you're 65 years old, you should probably be 65% bonds, 35% stocks. But for some of you young guys out there watching my video, I know a lot of you millennials are out there watching my video. I know some of you guys are in your early 20s or in your early 30s like me. You're probably going to be working for a couple more decades. So even if your portfolio is going down a bit right now, it's really not going to destroy you. You should already have an emergency fund set up. You should already have some, at least you want to set. I like to use Dave Ramsey. I know a lot of you guys might not like Dave Ramsey, but I do like what he says. He says you should try to save up at least 3 to 6 months of living expenses, and you should definitely set up at least an emergency $1,000 emergency fund if you're kind of like your cash flow situation is bad and stuff like that. So you should already be preparing for times like this. I've been hearing a lot of people saying that they were not able to go to work and stuff like that. You have to think like a squirrel. You always stash some nuts away, for winter. And this is an example of how people that think short term, thinking that things will never go wrong, thinking that there will never be crises in life, this is why they struggle, because they live day to day. You always save some money up. You always have some nuts stashed away in case of lean times. So I want to show you guys a couple stock charts. Now, I'm not saying that this is the exact same thing that's going to happen, but I was talking about Bank of America. I was talking about some McDonald's and some of these Starbucks. So I'm going to show you guys some of the stock charts in 2008, and I'm going to show you what happened within the next like 2, 5, 10 years. So just take a look at some of these charts. So the first stock I want to talk about is Bank of America. This was a stock that I was holding back in around 2006, 2007. I had a Bank of America account. The stock was doing well. The stock plunged all the way down to $3. Okay, $3 for Bank of America stock. So the people that bought Bank of America stock down here, even before this certain decline, they came all the way up. They almost 10 times their money. Now, yes, this took a long time. This took a 10-year time frame. But as you guys can see, when people get scared, they sold Bank of America stock all the way down to the same price in 2009 as it was back in 1987. I mean, think about that, guys. The stock price was at like the 30-year low. Now, obviously, if you were way up here, you lost quite a bit of money. But the good thing about Bank of America is they pay a dividend. So even if, let's say you even held on to some of your Bank of America stock, you still didn't recover, but you could have lowered your average cost basis. You could have picked up the shares at $3. $3 for one of the America's strongest banks. If Bank of America fails, America's going to fail. That's how closely tied Bank of America is to the United States economy. And look here, 10% owned by Berkshire Hathaway. So do you really think Warren Buffett is going to invest in junk? I mean, he's one of the richest guys in the world for a reason. So I'm going to show you guys another stock. Let me just do this live. Let's see here. McDonald's stock. Okay. Look at this chart. So let's see here. Okay. Here's another stock, McDonald's stock. It was actually doing a little bit better back then, but once again, McDonald's stock around 50 some dollars or so. And in the last 10 years, it ran all the way up. This is another dividend paying stock. I'm going to show you guys mostly dividend stocks because, you definitely want to try to put dividend stocks in your retirement portfolio because your time frame is so long. You're going to really benefit from those reinvested dividends. For kind of so I'm kind of on the same belief system as Phil Town. He says you should have a retirement portfolio and then you should have like your Berkey portfolio. So me, I do the same thing. I have a retirement portfolio. I only buy dividend stocks, and then I have like my high flying growth company portfolio that I like to invest in a lot of companies that don't pay a dividend. So let me show you guys another stock. Let's take a look at Starbucks, what Starbucks was trading at back in 2009. So let's see here. Now these are just some of the stocks that I kind of remember off the top of my head, but there were so many cheap stocks back then. It was just ridiculous. So we could be heading towards that same time. So let's take a look here. Okay, yeah, see, so in 2008, right around the crash, 2008, 2009, you had Starbucks at $4. $4 for the world's largest coffee chain was $4. So this is what I'm saying, guys. You have to think long term. I know it's a little bit frightening. The prices are going down, but once again, here you had I just showed you a couple companies. All of these companies. Okay, all of these companies pay a dividend. Now, I don't want to go into some of the non-dividend paying stocks because I think that, for this example, I want to show you dividend paying stocks, guys, because for a lot of you guys out here, you're probably more worried about your retirement accounts than you are about your individual investment accounts. So you could have got Starbucks at $4. If you had bought Starbucks at $4 and you had put enough money in, you ran up enough with the reinvested dividends, with the appreciation, you could have turned into a millionaire. So what I want people to realize in this video is you have short-term thinking and you have long-term thinking. If you want to do well in this time, you have to think long-term. You have to assume that businesses will rebound. You have to assume that humanity will thrive in the future. You have to assume that things will not only come back better, but even stronger in the future. Because usually humans, we're very adaptable. We adapt to crises and we come back even better. There's going to be, I've been reading quite a few articles that are talking about a cashless society. So we're going to figure out a way to reduce human contact so viruses aren't contracted. We're going to come up with ways to prevent this in the future. The American economy is going to come back stronger than ever. This is just a short-term blip. But what this means for you guys, if you take a look at this chart, is that in the future, if you had just stayed in the market, you could have done much better. So I want to basically close this video basically saying what I'm personally doing with my portfolio. I've been buying like crazy. So I've been adding, yesterday I added a couple stocks. I added to my Uber position and I bought Sunrun stock. So I bought Uber. I've been telling you guys a lot about Uber. I've been slowly adding to my position. So I picked up just a few shares of Uber because I really believe strongly in Uber as a company. I've made quite a few videos. I'm going to make some more videos on Uber as well, and I bought Sunrun. So I made a video in the past, I think it was about a week or two ago about Sunrun. Didn't get too many views, guys, but Sunrun is the future for solar energy in the United States. They're the largest residential solar electric company in the USA. What they do is they put panels, solar panels on your rooftop to help you reduce your electricity bills. So the nice thing about Sunrun is that with using Sunrun, you can reduce your electricity bills up to 60 to 70% other than using traditional gas. So this is another company that I've been adding to. I really love this company. I think it has a lot of long-term growth. I already talked about it. So if you guys are interested in the solar plays, this is definitely another stock where in the next 5 to 10 years, you're going to hear more people embracing the benefits of solar energy and stuff like that. So, guys, I just want to say, just think long term in these market times, and there's always a way to spin it. There's two sides to every coin. You can see the stock market drop as a huge negative, and that's what a lot of people are doing because for some perverse reason, it just seems like humanity is always looking at the negative side of things. But honestly, guys, I've never felt better. I'm happy to be alive. I'm happy to be able to take care of myself and my family. And I see something like this as a golden opportunity. I don't want to dwell on all of the negative things. I don't want to dwell on the coronavirus. I don't want to dwell on the people getting sick. I want to look at how can we turn this negative into a positive. And the best positive way you can do this is to buy up these companies, buy up some of these stocks that have been beaten down, that people are thinking short term and they don't believe in the power of our ability to adapt to extenuating circumstances. So that's it for now, guys. I plan to make some more videos about some nice stocks. I mentioned a couple stocks in a previous video I made. I think you can buy anything in the Dow Jones. You'll do really well. And for some of you guys out there, maybe you're not interested in buying individual stocks. If you just wanted a way to kind of just invest in general, I'm going to tell you guys a really nice index fund that allow you to just basically invest in the U.S. stock market no matter what. So I just want to show you guys this one little index fund, and I'm constantly preaching this index fund because there it is. So I constantly am preaching this index fund as probably the most simplified way for investors to get started. So if you're thinking about buying stocks, you're not really sure which stock to buy or something like that. Let's say you're just setting up your first stock market account, or you want to invest for your kids, or you want to do something. Let me show you guys where the best way to get started is. So Fidelity last year, they recently launched a free index fund. You don't pay any expense ratios, no fees, even cheaper than Vanguard's funds where you have to pay. It's pretty cheap on Vanguard, but this one is free. So guys, I really like this fund a lot. Guys, it's called the Fidelity Zero Total Market Index Fund, and basically what it does is it basically invests in the U.S. stock market. So as you can see, 19% of the portfolio: Apple, Microsoft, Amazon, Facebook, basically most of America's biggest companies. Guys, this is one of the easiest ways to get started as an investor. If you're not really sure which individual stocks to buy, you can buy an index fund, and this is one of the better ones out here. It's zero expense ratio, and obviously the fund has not been doing really well right now, but I actually have this index fund set up for my son's UTMA account, and I also own this fund in my my IRA account. So, guys, this is probably the easiest way to get started, but make sure you do something. I know a lot of people are scared, but this is if you're never invested before and you're kind of wondering where to start and you're a complete beginner, this is where I would start. FZROX, Fidelity Zero Total Stock Market Fund. Free to invest, no minimums, nothing. You can put $5, $10 into this fund if you want to. Now I believe the Fidelity minimum deposits. I believe minimum transfer is like $10. But you can invest, you can transfer $10 in, but you can even invest $1. So guys, this is where I would start, and this is what I'm doing for my son's UTMA account. I'm simply buying up shares for him basically almost every day, especially at some of these cheap prices, because I plan to hold those funds for him for the next 18 years, and hopefully by then he'll be more than a millionaire as long as I put enough money into this account now. So guys, that's it for now. If you guys have any more questions, I know this video was a little bit different than most of the videos. Usually I focus on individual stock or a group of stocks, but I just thought with the biggest stock market crash in history of the United States ever, I just thought this is really a time for an emotional video. You know, before people were very greedy and stocks were at an all-time high, and now we had the biggest crash ever because people are afraid. So guys, the best advice I can give you is someone that's been, investing in the stock market for quite a long time is just basically control your emotions, think long term, and stay consistent. Whatever amount of money you're putting into the stock market, try to maintain that consistency because you're going to be rewarded in the long run. You know, there's a very interesting quote. It says, if you continue to do the easy things, you know, life will be difficult. But if you continue to do the difficult things, life will be easy. So guys, it's very difficult now to keep investing money and think long term. I know because you're looking at your portfolio, you're thinking in the now, and things don't look good. But if you guys continue to follow my channel along, I would love to be able to document kind of the biggest stock market crash ever and hopefully a near return to some of those prices that we saw just a month ago in the near future. So that's it for now, guys. Thank you so much for checking out this video. I appreciate you guys so much. And my goal is to grow this channel as much as possible. I want to see how far we can take this thing, guys. So if you love my channel, you enjoy my content, please give me a thumbs up and hit that subscribe button. And even tell your friends too. Share this video around. I think this is a really helpful video for people that are worried or very fearful of what's going on. So that's it for now, guys. Really appreciate your time. Thank you so much and take care.